the Ranbaxy earnings out. There you can see it. Q3 numbers coming up on your screen. Hopefully we'll get to see a consolidated net loss at 1,030. That's Ranbaxy for you. What was the expectation on, I think Ranbaxy was a profit range for the quarter from 98 crores to about 633 crores. Ekta had warned that the numbers are expected to be very volatile, which is why you have such a wide profit range in terms of expectations. But this is a consolidated net loss number that we've seen, and this is on the consolidated basis.
The forex loss, in fact, should come up for you, because that one, I think, has come in excess of around 1,000 crores. So that's clearly 1,300 crores, I think, if you just look at that one. That compares with the gain if you look at it on a year-to-year basis. So that's clearly the factor that's played out on that one. Remember, the margin front, in fact, we'll have to add that one back. So at an EBIT basis, it's coming at around 1,060 crores. And then you have the, I beg your pardon, the forex loss, in fact, should be at around 130 crores. And you have an EBIT of around 16 crores odd. So watch out for that particular item as well. That's the last item on the list. If you look at the top line as well, it's coming at around 2,600 crores approximately. And I think we were working with an estimate of around
3,336.
Exactly. So I think even on the top line, in fact, we are seeing...
so it's an across-the-board difficult quarter, it looks like, for Ranbaxy at this point in time, right?
Right. And Ekta has been telling us that these numbers are going to be quite tricky as well. Even the margins front, we were estimating something between 15% all the way to around 25% approximately. So we'll be watching out on that front. But on the top line, prima facie, it appears that it's a bit of a miss. Even we'll be watching out for the geographic...
Bit of a miss, I think, would be a mild understatement at this point. Yeah, a big miss. But let's not jump to conclusions, because I think the expectation was that the big contribution this quarter would come in from Diovan, and it's not clear whether that has played out as expected or not. As of now, we're looking at very difficult numbers. That's a consolidated net loss in the region of 1,000 crores, consolidated revenue coming in at 2,619 crores versus an expectation of 3,236 crores. So that's a big miss in terms of expectations, and a net loss at 1,000 crores versus a loss of about 159 crores on a year-on-year basis. So that's a big jump in losses. We do have Sarabjit Kaur Nangra, Vice President Research Pharmaceuticals at Angel Broking, joining us on the line from Mumbai now. Sarabjit, at first glance, these numbers look like a big miss.
Yeah, a very definitely big miss, because we ourselves were expecting a good jump up in the quarter because of Diovan, and that's reflected even in the sales coming lower than expected, and definitely profitability consequently taking a hit, and hence a loss coming in, because as far as I can see the numbers, there's nothing very extraordinary, and in spite of that there's a loss. So definitely a big miss.
Why could you I know it's early to speculate. We need to see all the numbers and all the details and the management commentary, but just a sense of what you think could have missed the mark?
Definitely US. I mean, goes without saying, it's US, and on the definitely on the top line it will be US only. But on the bottom line, I guess one is margins have been lower, but
much lower, 4.3 versus 9.3 year on year. That's a halving of margins.
Yeah, but one part of that is actually forex loss, which they have reported. Otherwise, if I adjust that for normalized, without any forex gain or loss, then it's an operating margin of around 8%, which is decent.
Which is just about 100 basis point drop from the year-on-year number.
So it's operational-wise, it's a decent, but I guess less than expectation badly. And secondly, I guess because normally Ranbaxy doesn't do beyond 8 to 10%. So if I adjust for forex, I think its operating margins are decent enough, but definitely a big miss in comparison.
All right, Sarabjit, do stay with us. We're getting some more details from Ekta. She's tracking the numbers as well. Ekta, what do you have?
Well, Menika, right now, this is basically what we're working with. Is the most disappointing part for this quarter's numbers is the fact that the revenue has come below estimates, indicating that the performance that was expected from Diovan generic has not come through this quarter. So I would assume that that is the biggest disappointment which has come in. Plus, I don't know exactly what the forex element is at this point in time, which is in the PNL. But I heard the conversation with Sarabjit, and it's indicated that On an adjusted basis, the margins would be at around 8%, but that is in line with what the street has been working with margins of around 9 to 10% that they have been doing. But it's
Forex loss is 132 crores versus 10 crores year on year.
Okay,
that's the number that's just flashing on our screens right now.
Okay, so the Forex loss stands at around 132 crores, but Menika doesn't take away from the fact that the revenue has come much below estimates. It's a Forex loss of around 132 crores. There is a higher tax outflow this quarter as compared to the same quarter last year, but it still doesn't justify a 1,000 crore loss on the bottom line, plus sales which have declined this time round. If I'm not mistaken, sales have come in at 2,619 crores, which compares to 2,894 crores. So it indicates that Diovan Generic did not play as much of a part as it was expected to this quarter, or it might have even been other geographies.
So I think one guesstimate, Ekta, Sarabjit said, would be obviously weakness in the US market, which is their largest market. Do we have any more details in the numbers, if we have any kind of geographical breakdown that could sort of help establish why the revenue number has come in so poorly?
Well, right now, Menika, to be fair, I have to go through the entire P&L. And the other point to note is generally they release it with a lag, and most of the details come out in the conference call which they hold, which they're not even holding this quarter. So I think there will be scanty details in terms of Ranbaxy's performance, which will come out with a lag. But if I could just pose this question to Sarabjit. Sarabjit, the US market seemed to have underperformed this time. Do you think Absorica, besides Diovan, could be another reason why the US markets might not have performed at par?
No, I think the prime reason I could figure out possibly is US, and probably I would like to see other markets also, but I don't think apart from Dion there could be major disappointment, because it's reflecting on operating margins also, because otherwise there's no reason that operating margins could come in so low actually.
Okay. Do you think that the fact that the US FDA issues have now begun weighing in terms of their sales which they are incurring on a daily basis in the US markets, i.e. there's a loss in market share because of loss of confidence that consumers have? Is that one of the reasons you would possibly pose?
No, but see, adjusted for its one-offs, the company has been doing EBITDA margins of in the range of 6 to 8%. So from that context, if you remove the one-offs, the company is still doing the same level of operations it was doing. Only other thing that I figured out was the tax component in the quarter is much higher. So that is why the PAT is completely depressed. But if you look at before tax, it's primarily I think one-offs not playing the way it should have played out in the quarter.
Okay. So overall, it's a disappointing set of numbers. What would you look at in terms of geographies? The CIS performance as well. Do you think Russia has a part to play in terms of the margin performance we're seeing this quarter?
Yeah, definitely. Besides US, India and Russia, definitely.
So Russia, the ruble depreciation impact, how much of a impact could it have had on the P&L this time, according to you?
Difficult to decipher at this point in time, because in terms of profitability, if company has managed a quarter of around adjusted for extras around 5 or 6 in the range of around 7 to 8%, then I think it's one variable that's gone wrong for them is US. I think rest of them would have been, I think, somewhere around about only. I don't think there should be much deviation from its current operations actually.
All right, so ladies, if I may just sort of wrap this up here, given that we don't have more detail, it would be fair to say that while some of the bottom line miss can be attributed to the Forex loss and the big tax number that's come in, almost 888 crores, of which about 310 crores is for previous periods, it's the sales miss that is, I think of most concern, and therefore we'll need to see the geographical breakup in terms of numbers to see where the biggest depression has come in from. Sarabjit, Ekta, that would be a fair assessment of how these numbers have panned out?
Yes, I would think so.
All right, fine. We're going to leave it there. Please come back and join us as in when you have some more details on what exactly has gone wrong on the top line figure.